The National Stock Exchange or the NSE is making headlines again. The IPO buzz is getting stronger, and right ahead of the IPO, the unlisted shares of NSE have now soared to all-time high levels of 2200 rupees. Now, at these levels, the company is now valued at a whopping 5.8 lakh crore rupees, making it the 11th most valued firm in India, even bigger than giants like ITC and L&T in the listed space. Now, the valuation has actually surged by 25% in just 1 week in the unlisted market. The share price of unlisted NSE has actually risen nearly 200% in less than 4 years. And this surge has actually come in right amidst all the reports that are indicating that NSE has now settled a 1,000 crore rupee settlement with SEBI on the legal case involving allegations that some high-speed traders gained unfair access to its co-location servers as well. But amidst all of this news, what's really more interesting? The spike in investors' interest in a company that is not even listed. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and in this video, we're going to be helping you understand everything that you need to know about what are unlisted shares, how do you invest in them, and whether it is risky or safe to invest in such shares. So what is the deal with unlisted shares first, and why are investors rushing to buy them? Let's start off by understanding what exactly are unlisted shares. Think of unlisted shares like VIP passes to a show that hasn't officially opened to the public. Now, these are shares of companies that are not traded on a regular stock exchange like the NSE or the BSE. Instead, these are bought and sold privately to a grey market of sorts, or an unofficial market as it is called. They're also sold as part of ESOP deals or on specialized platforms. Now, for companies like NSE, the National Stock Exchange, which is now already preparing for an IPO, these shares are a way for investors to get an early access, hoping for big gains once the stock finally comes up with an IPO or gets listed on the stock exchanges. Now, you must often be noticing that there are so many IPOs that come in that retail investors apply for, but only a few get allotments, therefore missing the chance of early investment. But this way, in the unlisted market, there is a higher probability that your shares which you've got in the unlisted market will actually turn out much more beneficial for you, because you do not have to wait for an IPO allotment, and straight away when it gets listed, you will finally get an opportunity to see whether the returns are coming in profitable and whether you want to book them or whether you want to continue to hold them in your portfolio. Now, how can you invest in unlisted shares? You don't need to be a millionaire or an expert to invest in unlisted shares anymore. Retail investors can actually buy unlisted shares through wealth management firms or through brokers. There are so many wealth management companies now that offer the sale and the purchase of unlisted stocks, including centricity to consumers across the country, and besides, the other well-known wealth management firms like Nuvama, Incred also provides their clients with opportunities to invest in such unlisted shares like the NSE. Now, to buy such shares in the private unlisted market, first requirement will be to have a demat account. Investors can access the unlisted shares through specialized platforms like the ones that I mentioned, or even brokers such as Unlisted Zone, Planify, Altis Investec, or by even purchasing from existing shareholders. Say somebody who's been already holding NSE unlisted shares back from the year 2016, when the NSE IPO began to be in the works, and therefore the unlisted market was operational then. From that time, there was also a time when the stock of NSE was trading in just 3 digits. So from that time to somebody who may already have made some money and may be wanting to exit before the IPO comes in as well, you could be looking at buying from those existing shareholders or maybe institutions that deal with the private market transactions. Now, it is also, however, advisable to use trusted platforms, and if there is limited knowledge that you have as to whether to find out a trusted platform is, consulting a financial advisor is definitely recommended in this case, because remember, the risks are far higher than in the listed stock market space. So instead of venturing yourself out on your own, do seek a professional advice. Now, KYC requirements will be done. Documents will have to be furnished, including your PAN, your Aadhaar, your Demat account details will be mandatory when you want to invest in unlisted shares. And next, you will need to sign a share purchase agreement. It's crucial to retain a proof of the payment as well, especially when a third party is involved, or for record keeping and for potential dispute resolution later on. Finally, always ensure to receive a confirmation from the broker to avoid any kind of issues or scrutiny in future as well. Now, usually, like I pointed, there are three ways as to how you can invest in the unlisted market: either buy through platforms, these specialized platforms of wealth management companies or brokers; intermediaries who specialize in these as well; then ESOPs, maybe somebody in a company who may be working already there may have got ESOPs of a company far before the company was going to be listed. So now you could probably buy that ESOP from them and also reap the benefit, because such companies, when they come out with the IPO, there could also be a quota of employees, and you could then probably look at investing or reaping the benefits from that section as well. Now, apart from this, there are private deals. If you know someone who's close to the company or through a fund, you could probably look to invest in them. Of course, this space is less regulated, like I marked, than the public markets, and therefore they carry a lot more risk, than the public markets as well. So what you need to do is that you have to have a proper research, complete your KYC requirements, and of course speak to an expert, and only then invest. But if you ask that why are they so popular, it's absolutely simple to understand the opportunity that they present. Imagine having bought shares of maybe a Zomato or a Mankind Pharma far before their IPOs had even come. And today, when you look, the kind of rally that these stocks have seen after their listing is the kind of opportunity that you would have got far earlier at a much lesser price. So it only gives you an opportunity to build more wealth for yourself. So that's the only attraction. So early investors in the unlisted shares often hope to cash in on big amounts of wealth once the company gets listed. But what are the risks? That's something that you need to know. Unlisted shares lack a standardized pricing mechanism, which means that prices can actually vary of the same stock across various brokers. And this actually creates a valuation ambiguity and also increases the risk of maybe overpaying. Maybe you may be paying something for same NSE unlisted shares, 2200 on one platform, but 2000 on the other platform. So keep a check of how the prices are varied. Now, these shares are also illiquid, meaning that if you want to really sell them quickly, you might actually not find a buyer as and when you may really need, or may actually have to sell at a loss if you are in need of the money. So illiquidity is something that you need to keep an eye out on. And since unlisted companies don't have the same disclosure norms, you may not get access to financials of the company, performance reports of the company as easily as you get on the exchanges for the listed companies. So valuation is another gray area. It's often more guesswork than science as well. And lastly, taxation. If you sell after 2 years of having bought the shares, you actually pay 12.5% of long-term capital gains tax, and sell before that, it's actually added to your income tax, and that's how you pay as per your tax slab as well. Now, the question is it worth investing in unlisted shares? So investing in unlisted shares is risky. But if you are willing to go to do your homework and can stomach the risk, the big rewards can also come in into some cases as well. Remember, post-listing, SEBI also mandates a 6-month of a lock-in period for pre-IPO investors, which means that if you invest in NSE IPO shares today, and if the IPO comes in, say, about 4 to 5 months later, then beyond that 6 months also you will not be able to sell the shares because you have that lock-in period. This means even if the company lists successfully, you have a much higher price, you may be tempted to sell, you will not be able to sell immediately because of that lock-in period as well. So keep an eye out on that as well. So look at all these risks and only then invest wisely, conducting due diligence, having realistic expectations as well. Since unlisted market shares inherit that high risk, you should allocate only a small portion of your portfolio that you can risk on a higher amount. With that, we wrap up, but do stay tuned as we continue to get you such fascinating insights from the world of markets.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.